Hello, this is Coach Mike from WinningStockCoach.com. I'm going to go over my market overview for the week ahead, the week beginning October 27th, 2014. First let's start out on the daily chart, and going to go over a little bit of, last week's estimations. We expected that up move really into this trend line you see here, and you'll see on Wednesday we started to get that pullback from it. Over at the coaches roster, we talked about this and said we were going to wait for confirmation in case that was the scenario we got. Confirmation meaning further pullback, a break of the low from Wednesday. We didn't get it, so it caused us to kind of hold up and wait for a few, what I like to call bearish arguments to be removed. I think the main thing with the bearish argument, and we talked about this probably about a month and a half ago, as we recognized the dip and started planning for that fall, that the biggest and probably most important bearish argument that we could see would be a head and shoulders pattern on the S&P 500. And you see that would put us, up in that range between 1985.44 and the high 1991.39. I do have a Fibonacci point at 1972.01 that I'm going to be watching as well. But, much like I said in last week's video, after the lower low was made, we expected a new high to be made, or an up move to be made, and that up move had a higher probability of being a lower high, and that lower high would simply be lower than the 2019-26 high that it made before the drop. So in essence, because we got the lower low on the weekly, we kind of were left having to wait for this up move. I talked in last week's video about the correlation in the chart at the time with what we had seen over in here, and that if it was going to give us an indication that it would be a time to buy, it's probably probable that it would make enough of a pullback for us to identify before we would open new long-term positions. So that's kind of where I'm at here with the SPX, simply because of a very, very simple technical indication, that lower low that was made on the weekly. Now, I do want to point out some information, global economic news that came out this weekend. Over in Europe, the stress test that they done on their banks, not very many of them met the criteria, which basically says that they think they could be quite weak in their financial sector in general. So that could maybe give some concern in the markets this week, maybe cause a pullback. And, over at the Coaches Roster newsletter in our chat room, we've talked over and over again about right now really kind of having to have a shorter term approach on a lot of our trades. Now, one thing that happened last week that it's not that we weren't prepared for, we were simply just waiting to see, it was part of our trade plan, was some of the big names that we were reporting earnings last week. And to be quite honest, we saw some pretty impressive earnings this past week, but we saw a few that were kind of sketchy. They looked good when the numbers first were released, but if you actually read the 8Ks, maybe not as impressive as that initial headline release. And I think that may have caused the possibility to see a slight pullback in those. Again, with the SPX, I think right now the key thing here for us to identify is, again, the lower low that we saw made. Now, one more time back over to the daily chart, and I want to point out something that, at the last Fed minute release, we kind of got one completely manipulated up move, but really a decent up move that was a couple day up move was after this pullback that came down on October 2nd. We got a couple days to the upside, and we made that high of 1977.84. it was really from that point, as you see the daily candles as we move down, that was the first time in this down move that you actually made an up move that lasted more than a single day and did anything more than retrace half of the last fall. And what I mean by that, if you mark the difference in these 3 down days and this 1 up day, you didn't even retrace half the fall. You see this big down day and the up move here, you only retraced half the fall. So this up move was one that looked like it could be promising, but we fell from it. And until we break this high, you still have that argument of not making a higher high. So basically, what I'm looking at here is the opportunity that if the stress test news on the banks from Europe doesn't hurt our markets, we may have a slightly trickling up move. The volume was a little bit on the decline, even though we went up Thursday and Friday. In general, we saw things kind of not really having the volume to substantiate the moves. So I think if they made further up moves, it would be a little bit light before a decent enough pullback to really gauge and plan and give an indication of the types of trades we should be making. Moving over now to the DJI chart. This is our Dow Jones Industrial Average. Again, we talked last week about the lower low that was made. We got just below our target area, but still managed to close above it. And we set a couple higher side targets. And the first I want to point out here, we're going to go over to the daily chart so you can see it a little better, is this 16,871.98. You see by the move that might have a little more to go, maybe another up day or so. And I think that right now is one that is of probably the biggest importance to me, because any longs that you might have been in on this bounce, a pullback from that point is probably where you want to think about at least lightening the load a little bit, maybe selling a little bit. Once it confirms a pullback, you might have to get out of all of it. But as I move back to this weekly chart, I want to show you, that also with that potential at the head and shoulders pattern we talked about, it could really get us into the secondary target, this 17,190.44, and still give the bearers that argument of, hey, a pullback from here is a right shoulder for that dreaded head and shoulders pattern. And if we saw that, that could create a little bit of fear in general in the market. And one final thing to kind of point out is I personally think that before any type of concern, maybe like that fearful word that the media likes to throw out there every once in a while, the market crash, I think before that were to happen, I think we would see a double bottom at the worst off of these last lows, and then a subsequent bounce that doesn't bounce very much, even though it may look at the beginning like it will. And from that point, we would need to start looking for how dreaded those words could be. So, just throwing out some different possibilities. I do think that should that news that came out of Europe not really hurt us, we could see a little bit more to the upside. I think for the DJI, we got a long way to go before we could make a higher high. And after this lower low, it kind of makes me feel like we're not going to do that, or at least we're not probable to do that before first getting another pullback. Moving over to the RUT, the Russell 2000, our small cap index. One of the target areas that I put out last week, this 1117.01, we got pretty darn close to it. Here, I'm going to switch over to the daily chart. You're going to see that Friday, it was kind of a weak day, but did manage to close above that target. And like I say all the time when I put these numbers out, it's not an exact price point that I'm looking at. If I can be plus or minus 0.5% or 1%, that's what I'm really, really looking for my own personal trade plans. So with the small cap index, with the RUT, this one is the one that's already not only given us a lower low, but has already given us a lower high in this sequence. So I'm really going to be watching. I'm not going to convince myself of it. I'm simply going to be waiting for the opportunity. Like I tell people all the time, you don't need to be scared of the market. You also don't need to be convinced of things in the market. You simply need to react based on what you see in the market. And what I'm seeing right now is that if we began to pull back from these points, it would probably be some small cap stocks that made some decent moves that I would be interested in opening short positions. I think that would be a probable outcome from this point should we begin to pull back. And I'm not talking like, oh, we pulled back in the first 5 minutes of Monday. I'm talking like, let's see the close on Monday and continuation Tuesday, or at least a close of a day this week that may be to the downside and continuation the following day. And that's what I would be looking at to open some new short positions in small caps if we were to get that. Moving over to the COMP chart, this is the NASDAQ composite. And, some weeks I talk about the COMP, sometimes I talk about the NDX, which is the NASDAQ 100. This week I'm going to talk about both because there is a big difference in the charts this week. First of all, with the COMP, we are at that potential area where a pullback from here would be that dreaded right shoulder of a head and shoulders technical pattern. That's definitely going to be something we want to be watching. We did fail a major trend line on that last dip, and I'm one that believes that doesn't mean you're just going to fall forever. That just tells you an indication of after a down move, you need an up move too to identify a new trend, and that up move that's made will simply be saying keep an eye on a potential new trend before you basically don't see what's going on and end up hosing yourself over as far as your portfolio goes. So on the COMP, I think it's really, really important to be watching from the get-go this week. And it'll be the weekly close that's more important to me than anything. But in reality, a pullback from this point is going to be what I'm really, really looking for in a weekly close that goes red for the week and closes below 44.85.93 will still give me that indication of that right shoulder. The NASDAQ 100, which many people would probably say it's the top 100 charts in the NASDAQ, it actually went up a little higher than that right shoulder area. As you can see here, there are some really good earnings in the stocks that make up this index, and we have some earnings coming up in the upcoming week as well that could really shape-shift this chart overall. What I'm really going to be looking for again here is on the move and a slight pullback that we saw in August. We made a lower low on this past pullback. That still indicates to me the possibility of a lower high to be made, but I'm also not foolish. If we were to break and close a week above $4,100.09, that would actually shift the mindset, but you have to understand how that mindset shift would be taking place. A breakout, a momentum trade that would ensue on this type of break isn't something that I'd be looking at long-term investments for. It'd be short-term trades. What can I simply trade the momentum? And as I say to members of the coaches roster all the time, a momentum trade's a very, very funny animal. And you don't want to still be in it when the Momo is no-mo. And what I mean by that is a momentum trade is a big burst type trade. You see high volume, and as that volume starts to decrease, it's simply a matter of time if you continue going upwards as that volume is decreasing until quite literally the carpet gets pulled out from under you and you slam down pretty hard. And what I would be looking at on that momentum trade is when that momentum is no more, when the Momo is no-mo, those trades would simply be exited. So even though I'm not prepared to make those trades now, I don't think it's warranted by the chart. I'm simply telling you that my reaction to a weekly close above 4,109 cents would indicate to me the opportunity for momentum trades. And to take those momentum trades, much like we saw here, and these were momentum trades that we talked about on the market overview videos. When we made the breakout of this candle, we got nice momentum trades, a bit of a relax, which was where we lightened positions, a bit more continuation, and we got out on the first sign of weakness in the continuation. So it would simply be something where we would take that same type of approach. I think it's a really important week coming up. I think that it's going to be important to see how some of the stuff that came out of Europe over the weekend affects the U.S. markets. Am I going to sit here and try to play the Messiah or the prophet and try to tell you exactly how or if it will? No, that's not the nature. It's actually not how I trade. I simply am aware of it so that I can be prepared to react on it. This is Coach Mike from WinningStockCoach.com, encouraging you to have a plan for your trade, prepare to react to what you see in the markets, and simply don't spend too much time stressing yourself out over some false belief that may have no chance of happening. And I mean that to either direction. God bless you in the upcoming week.